So closing stock, we have no issue about it, right? The next item here, and I would want us to be noting it so that it will reflect the 10 adjustment we discussed. So this is commission unpaid, and we all satisfied ourselves that the commission was an income, right? Because in the trial balance, you see commission at the credit side, that's an income. So this is an income unpaid, income unpaid. And if an income has not been paid, it means it's in arrears or accrued. So it's income accrued. And what did we say about income accrued? We said, I think I should ask professors about this because my professors should know this. So professors, income accrued, what happens to it? I think Frank will lead us in this regard. Yeah.
Okay, so the income accrued
Mm-hmm.
in the balance sheet,
Mm-hmm.
that just made as a current asset.
Okay.
Profit and loss account.
Mm-hmm.
It is placed under the what do you call it? Placed as an income.
Okay. Okay. That is accurate. So like we learned, for accrued income, you add, so you add to your other income. So let's go to the other income, right? In the profit and loss account, you see commission. We are adding that 1,800 to the 10,000 we had already received. So you add it, and the commission is an income, so it's part of our other income added to the gross profit. Then in the balance sheet, this 1,800 accrued income is a current asset. So under your, as part of your current asset, you see it here, commission unpaid, 1,800, and that settles it. Let's go to the next one, which is provision for bad debt. Provision for bad debt. I think I spoke, in fact, I I don't want to say I wasted a lot of time, but I spoke plenty on this provision for bad debt. Prof. Alexia, oh, unfortunately, I think your microphone will not permit you. Frank, let me worry you again. Provision for bad debt. What did you gather from the discussions and the plenty talking I did? Or maybe I should do this myself.
The provision for bad debt
Okay.
is in the balance sheet, it is treated as a the new provision is treated as a current asset. And if it's a doubtful debt in the profit and loss accounts, it is treated as an expense.
Okay. I think I have to reshape in this submission. So yes, the provision, the new provision goes into the balance sheet, not as a current asset, but it is deducted from debtors. So take note of that. It is not treated as a current asset itself. It is deducted from debtors. However, these were the points that I made. First, look at comparing the old, okay, to the new. That should be your first thing. Look for the old one. Look for the new one. And I gave you where you find the old and new. The old is in the trial balance. The new will be in the additional information. If you go to the trial balance for the old and you don't see it there, it means the old is 0. So in this question, when we check the trial balance, there is no provision for bad debt, or sometimes they state it as provision for doubtful debt. So it's the same thing. Either provision for doubtful debt or provision for bad debt. Okay. So in the trial balance, it was 0 because there is no amount in there, right, for provision. Now, when you come to the additional information for the new, you are told that it should be 10% of debtors. So you need to do a calculation by multiplying 10% by your debtors figure, and that is how much. The debtors is 15,000 here. But for this particular question, we have to less 200 bad debt again from that debtors figure. So that is to say, if you are noting something down, anytime they give you a rate to calculate your provision, when you pick the debtors figure, check the additional information. If there's a bad debt there, less it. So we did this, and I think 15,000 minus 200 is 14,800 times 10% will give you 1,480. So when you get this old and new, then you check, has it increased or decreased? And the answer is it has increased, because first it was 0. Now it is 1,480. So it has increased from 0 to 1,480. So this increase will go to your profit and loss account as an expense. So as you see it here in our profit and loss account, as part of our expenses, you see increase in provision, 1,480. Then when you go to the balance sheet, you less that new provision of 1,480. Okay, so less from your debtors figure, that amount. So you less it from your debtors figure. And that's how you treat your provision. If it were to be a decrease, then you add it to your other income. But still in the balance sheet, as for the balance sheet, it doesn't change. You always less the new provision from your debtors figure. But in the profit and loss account, if it is a decrease, you add it to your income. If it is an increase, then it's part of your expenses. So that's also the bit about provision for bad debt. Okay. The next item was about telephone outstanding and accrued salaries. So telephone and salaries, as we check the trial balance, were expenses, right? So this expenses accrued, because outstanding is the same as accrued. So both the telephone and salaries were accrued. What do? We add accrual. So this 1,002 and 15,000, we have to add them to whatever we have in the trial balance. That's why in your profit and loss account, as you list your expense telephone, you pick the 3,000 in the trial balance, you add that accrual of 1,002. You do same for salaries. Pick the 30,000 in the trial balance, you add the accrual of what? 15,000. Now, when you get to the balance sheet, we said these accrued expenses are liabilities, current liabilities. And so you see the 1,200 is here in your balance sheet under your current liabilities, telephone outstanding, and accrued salaries here as part of your current liabilities. That one too, very simple. Then the next one was rent was received in advance. So again, we checked and we saw that the rent here is an income, right? 2,500 at the credit side, so it's an income. If it had been at the debit, then that would be an expense. But credit means this rent is an income. So this is more or less like income received in advance, or what we saw in the discussion as income prepaid. I think we have already dealt with the expense accrued. So income prepaid, what did we say? We say you less it, right? So this rent is an income, right? But there's a prepayment, so we less it. We less the prepayment of the house. And this is a current liability. So in the balance sheet, as part of your current liabilities, you indicate rent received in advance, 1,000, as part of your current liabilities. Very simple. Okay. So at least you appreciate 1, 2, 3, 4. 6 more to go. The other ones are the owner taking something for personal use. And we saw it could be goods, it could be cash, or it could be from bank, or it could even be an expense. The owner is adding his or her private expenses to the business expense. the general adjustment to this is whatever the owner took, you less from that particular item. So if it is stock or goods, we will less it from purchases. Why? Because the purchases holds the stock we have bought, and it is out of the stock the owner is taking the goods. So if it is goods, less it from purchases. So here, the 2,000 worth of goods, we less it from purchases in our trading account. Okay, yeah. And in the balance sheet, it's part of your drawings. So in the balance sheet too, we indicate, I think I lumped it up with it. So let me separate it so that it will make sense. So plus the 2,000 and the 9,000 was what he took from the bank. So you see that is also part of our drawings. And since he took it from bank, we will less it from bank. And bank is a balance sheet item here, current asset, right? So we less it from it. So that is about the owner making drawings. That one I think is even very, very easy. Great. Then the interest on loan. Interest on loan. When you see interest on loan, please always look for the rate. Is it 10%, 5%? Multiply it by the loan amount. In this question, the loan amount was 140. The business took 140,000 naira loan, and they are charging interest of 10%. Interest is an expense. So in the profit and loss account, you calculate it as your expense. When you go to the balance sheet, this figure is a current liability because they haven't paid any interest on it. Let's assume if they had paid something, it would have been in the trial balance, maybe interest on loan with the amount there. Even at that, compare with the 14,000 and see if there's any outstanding. So let's say in the trial balance, you saw interest on loan 10,000. You still calculate the 10% on the 140, and that will give you the 14,000 for expense here. But in the balance sheet, since they have paid 10,000, the current liability would have only been the difference or the outstanding 10,000. But in this question, they had not paid anything. So the trial balance, there was no interest on loan payment. That's why the 14,000 is here as a current liability. So that's also about interest on. As for bad debt, I don't think I should go over it. Well, if you see bad debt in additional information, take it to your expenses. But there's possibility that you already have some in the trial balance. So you add the two and take it to your profit and loss account as expense. So you see it here, bad debt. This was the 600 from the trial balance. You add the additional information. But in the balance sheet is only the 200 in the additional information you less from your debtors figure. Okay. Then the last two is about provision for depreciation. Provision for depreciation. The two methods, on cost and then reducing balance. If it's on cost, in your profit and loss account, multiply the rate on the cost of the asset. So on furniture, it was 10% on cost, and the cost of the furniture in the question was 95,000. You see it here, furniture cost. So you multiply 10% on 95, you are good to go. In the balance sheet, okay, when you present your furniture cost 95, the accumulated depreciation will be what you have calculated, okay, in the profit and loss account, which is the 9,500 plus any previous depreciation in the trial balance. And you will see it in the question. It always provision has credit balances, 5,000. So you add it. And that gave us the 14,500 for accumulated depreciation for furniture. The second one was reducing balance, machinery. So for that one, in the profit and loss account, you multiply the 5% by the cost minus previous depreciation. That previous depreciation is in the trial balance. And it's here. Provision for depreciation of machinery. So you less it from the cost before you multiply the 5%. That's the reducing balance method or book value. Okay. If you check the trial balance and there is no previous depreciation, then it means it would have been 90,000 minus 0. And you multiply the rate by the result. Okay. Again, in the balance sheet, you pick this old one in the trial balance, 10,000, and you add on what you have calculated in the profit and loss account. So 4,000 plus the old one, 10,000. That's the 14,000. Okay, so Frank, I think these are the issues. If you can remember these, then you are good to go. You should be able to solve 80 to 85% of, as much of fact, 90% of all the past questions that have come under this topic, and subsequently solve any question that will come in your WASI around this topic. So if you have anything to say, you can ask or say. Then we'll wrap up with today's class. I'll share the videos with you within the course of the day.
So I only have thank you to say.
Okay, so I think you would have the privilege to go over the videos. Please note them. This is highly examinable, number one, and most of the topics you'll be treating would have this adjustment there. And it will be the same. You won't change anything. So take your time on this adjustment very well. Thank you very much. I appreciate your network
Please, I want to ask something.
connectivity.
What if there's a new topic that we start? Um, the bank reconciliation statement.
Yeah.
No, I'll go and watch videos on it before maybe um start a lesson or something. But I just want to know if there are any adjustments in it.
I think we are done with the adjustment. So I'll share with the videos with your colleagues. I don't know, but I hope they watch and understand. Because I think next week we can discuss the right from this topic per your syllables. You are supposed to look at the detailed provision for depreciation and provision for bad debt account. Those things. I'm sure you started it in school, but I'm not sure our time will permit us to look at that topic. So maybe I would have wished that we solve more questions on, if possible, most of the past questions on the trading profit and loss account. Right. But regarding your request, I think I have some videos on bank reconciliation statement myself. So I'll share with you privately. It's not a difficult topic, it's one of the cheapest topics. So I'm very positive. Even if you learn it on your own, you would understand it very well. But I'll share the videos with you. If I have a free time, I'll let you know so that maybe we discuss a few things on that topic. Okay, so thank you very much, Prof. I'll see you on the page. I think I'll put in one question after sharing the videos for you to access. Thank you and have a great day.